Great. So welcome everybody to Baltimore Roundtable for Economic Democracy's Worker Cooperative Conversion webinar. So in this webinar, we're going to be going over a lot of material, but a few housekeeping things just to start. Again, the chat is available. So if you do have questions, please feel free to use that chat for any and all things. We're going to actually leave all of the Q&A to the end, and we're going to give ample time for question and answer. But that chat is available. Feel free also to change your name. You can list out your preferred pronouns, so when we actually do respond to your questions, we can accurately identify you. Last thing is, these slides and a survey will be handed out and emailed to you if you've registered for the event. So just know that up front. As well as we will be definitely able to engage, and you can see our email there, info@baltimoreroundtable.org as well. Great, so we're gonna go ahead and get started. So today we're gonna be talking about cooperative conversions, and more specifically, we're gonna be talking about this from the perspective of a small business owner. We know that during the time of COVID and where we are today, there are a bunch of pressing needs and challenges in the Baltimore landscape, as well as just the United States as a whole. We'll talk primarily about sort of the types of conversions that are possible or applicable to different types of businesses, how it works, the ins and outs of actually running a sort of cooperative conversion, as well as how to think about valuations and the actual funding mechanisms behind the sale of your business. We'll leave ample opportunity for Q&A at the end. So please do, again, feel free to put your questions in the chat. But first, who are we? My name is Joseph Cureton. I'm a project officer here at Baltimore Roundtable for Economic Democracy. I've spent the majority of my career in technology and actually not in the co-op sector. So like many folks on the call, I was a newbie to this coming into it. But very fast learner, and actually I'm part of another worker-owned cooperative here in the city called Obron. We are a holding cooperative for multiple different businesses in the staffing, construction, technology space. And I'm joined with Jim Johnson. Jim?
Thank you, Joseph. Hi, everybody. I'm Jim Johnson, a project officer with the Baltimore Roundtable. I also spent 10 years in a worker co-op here in Maryland, and have spent the last 10 years or so providing direct support to worker co-ops in various business sectors, including working with our national federation, the U.S. Federation of Worker Co-ops. And I've also been in small business for most of my life, and I'm very interested in working with you today and how we can help you look at your business succession and possible buyout by workers. Thank you.
Awesome. So we're part of an amazing team here at Bread, full of actual seasoned worker owners. So one of the things that I really love about the Bread team is that we bring both the underwriting and loan fund expertise, as well as the actual lived experience of being in a worker-owned business. So when we're talking about this, we're actually talking from a place of experience, as well as from sort of a technical background. So let's talk a little bit about the problem. So we all know, and we're sort of all here today because we understand that businesses in their inception are just plain old hard to sell. Whether that be a family-owned business that potentially might want to have a family member run the business once the owner leaves or retires, or whether that be a business that just solely wants a fair price for when it's actually changing hands. There are a bunch of different types of business buyers out there, but most of the time when you're talking about a financial buyer, they actually aren't looking out for the community. And at Bread, one of our core values is looking out for both the workers and also the communities in which they reside. So what we have found is that employee ownership as a whole actually outperforms the majority of businesses, both big and small, in a lot of key metrics. This is actually from the National Center for Employee Ownership Index. It's a motif of how similarly situated firms outperform the S&P 500. So at the end of the day, what we see is that employee ownership might not only be a potential succession plan for a small business, but also might be a way for those businesses to grow and thrive in a hard or in an adverse ecosystem. So who we are? So Baltimore Roundtable is a group of worker-owned businesses that have been formed in the Baltimore City and also Maryland landscape that are responding to community challenges. So things like Baltimore Bicycle Works that provides both bicycle repair and sales, to Harker Brothers, an ice cream shop that is actually started out as a nonprofit that converted into a worker-owned cooperative, as well as things like Red Emma's and Mirror Kitchen Collective. So ultimately, we are a loan fund, so we do provide non-extractive financing, and we're part of a larger network called Seed Cummins. These non-extractive loan funds operate throughout the country. We are the local Maryland peer of that loan fund. So let's dig into it a little bit, just about the nuts and bolts of selling your business. So when you're looking at a sale of any asset, there's generally a sort of happy path that most folks think about. Whether you're an early stage business that's trying to get off the ground and you're wanting to grow to scale and you're looking for venture capital, or the traditional route, once you get a little bit later stage and maybe a little bit bigger size, you might contemplate selling to a competitor. After about 3 to 5 years of that sort of band of sale, there might be a private equity deal that comes into play. So something like a manufacturer or something like that. And of course, everybody knows the sort of unicorn growth of an IPO. So what has happened here is this happy path sort of is fairly restrictive. And what we actually love about worker cooperatives or about employee ownership is that it actually works at any size and any scale. So there are a lot of different ways to contemplate employee ownership or worker ownership. For us, we're going to focus on worker cooperatives. So I know a lot of folks have heard about ESOPs or ESOP or employee stock ownership plans. Generally, they are for larger businesses that have the ability to pay the upfront costs to actually form those entities. So we're today going to be focusing on worker cooperatives, and the distinction there is a worker cooperative is not actually that employee stock ownership plan or the retirement plan, but does have a lot of the same or similar characteristics. So specifically when we're talking about worker ownership, the thing that you want to understand about a co-op versus, we'll call it an ESOP, is a co-op is one member, one vote. So when we're looking at small business, generally we're looking at a size of employee base of 5 to 10 workers or more that have the ability to also operate on a one member, one vote basis. The other thing that you're wanting to look at is generally the size of the business. So ESOPs, again, target traditionally larger businesses than cooperative conversions. And today we're going to be, again, focusing on that. So I want to turn it over to Jim to talk about a little bit of the timeline behind what a worker cooperative conversion and how it actually works through the stages.
All right, thank you, Joseph. One of the things we want to do with this webinar is to demystify this process. And while it might sound exotic or unusual, a worker buyout really isn't that different from any other type of business buyout, really. And there's a timeline, there's a series of events that have to happen. And you can see from this timeline, I hope, that it's really, most of it is relatively similar. Just like any consequential deal, you determine the desires of the buyer and the seller when starting out. Make sure you actually have motivation and interest. There's also, you want to look at the feasibility, what's the status of the business and the future of the business. And you have to factor in any financing that might be necessary in order to test for that feasibility. There's a valuation of the business. And if it's a relatively small and simple business, this doesn't have to be complicated, but there's multiple formulas and ways to do valuations. And you want to look at how the ownership transition may impact the business plan as well. There don't necessarily have to be a lot of changes to the business plan, but there also may be opportunities during the ownership transition to implement some changes. One of the things we recommend is a buyout committee. It's not always necessary, but many successful conversions create an internal committee made up of frontline workers as well as management folks to really scope the process, help to build out the timeline, and to help surface whatever the concerns and questions are of the workers and any other players in the buyout process. So that can be a very good key component that helps to really formalize and structure the entire buyout process. There's also a funding search, and that's something that has developed in the worker co-op sector very significantly in the last 5 or 10 years. There are a lot more funding options than there used to be, and BRED is a loan fund first and foremost, and so along with the Seed Commons network that we're part of, we're sort of at the leading edge of traditional as well as innovative funding solutions for worker buyouts. There are lawyers that we can bring to the table that are comfortable and familiar with worker co-op conversions. There are some nuances to consider, and so it is very important at some point to have informed legal counsel to at least look everything over and support the closing. The management succession can vary a lot depending on what the nature of the management is prior to the buyout. The one thing we like to emphasize is that we're really talking about an ownership transition, and that doesn't mean there has to be a transition in the management structure if we don't want. A worker co-op as well as a company converting to a worker co-op can really have a fairly conventional management structure if that's what was existing prior to the deal, or if that's what people want. And so there is no need to radically change the management structure. And in fact, given the transition in ownership, we like to advise that folks change as little as possible in the other aspects of the business, unless there is a compelling advantage in doing so. Gaining employee approval is, of course, a critical part of closing the deal, and that's one thing where the members of BRED, and most of us are previous worker owners from worker co-ops, and many of us are current worker owners in worker co-ops, and that's where we bring a lot of value to the table, is in communicating with and addressing issues with the workers, questions and concerns. And as with any deal, it's really the discussions that happen well in advance of the deal that help to ensure a smooth closing. By the time we get to closing the deal, we're looking to have already surfaced and addressed all of the issues and provided everybody with whatever information they might need, and clarifying the support during and after the deal to help make the closing more of a formality than anything else. There is sometimes there is some restructuring that's advantageous or appropriate, in which case we can support the design of a new business structure, a new management structure, and so forth. And then completing the transaction, there's usually a fair amount of documentation involved. Again, that's what we turn to attorneys for, and some potential significant tax advantages for business owners selling to their workers, and that can be part of the deal as well. Next slide, please. Thank you, Joseph. And so, what does it look like? What does, the governance of a business in a workplace democracy, how do the owners express their interests through the structure of the business? It's not as unusual as it might sound. Those of you who are familiar with membership organizations, nonprofit organizations, or even many churches know that these organizations have members. The members elect a board, and the board hires and oversees management. A worker co-op often functions in very much the same way, and with a fair amount of flexibility, but the concept is very much the same. The members are the owners. They have the power to elect the board and to run for the board and serve on the board themselves. And then the rest of the management structure can look really very conventional if that's the kind of structure we have or the structure we want. Go ahead, next slide, please. So yeah, the emphasis on democracy is making it practical. We have a lot of experience in doing that. And again, not as mysterious as it might sound. We're going to visit 3 different business sizes here, starting with the simplest. If your business is fairly small, like a lot of small businesses, maybe 15 employees or less, then you're probably already have a culture where people are fairly familiar with each other. A lot of small businesses already have a very participatory culture, and this can be a very good match for worker ownership and leveraging that participatory culture that already exists into an actual democratic culture. A larger organization can function, again, very much like a traditional company. There may be a large number of workers that, again, will elect a board from amongst themselves. The board can also have outside members, voting or non-voting. And the board, just like the board of investors in a large corporation, hires and appoints the management, and the management oversees the workers. And the workers on a day-to-day basis function very much like ordinary employees in a conventionally owned company. But when the workers gather in a general assembly, they are in fact like a stockholders meeting, the owners of the corporation, and they can elect and serve for the board themselves. And so we have, again, if we have the option of a fairly traditional hierarchy. Next slide, please. If we want a different kind of structure, or if we have sort of a medium-sized business, it's not really small and not really large, we have a number of options. We can structure it conventionally, but many worker co-ops have been picking up on some of the work that's been done in the late 20th century relating to self-directed work teams, where semi-autonomous groups of workers in a particular department on a front line are empowered to make decisions for themselves. And because worker co-ops are very flexible and the workers can brainstorm and have direct control over how to evolve their management and governance structure, self-directed work teams can be a good option that strikes a good balance between a conventional structure, but empowering frontline workers to who have the benefit of policy awareness as well as operational awareness to make even better decisions and be more effective than a conventional organization. So self-directed work teams are one of the interesting innovations that we can help companies to explore. Next slide, please. You want to take this, Joseph?
Yep. So let's talk about valuations. I mean, at the end of the day, when we're assessing a sale of anything, we need to figure out how much it's worth to whom. So in the spirit of demystifying these sort of transactions, I really want the folks that are on the call to put themselves in both shoes. So the benefit of having a worker co-op is that you're going to a buyer that actually knows the business. So it's sort of like you're selling your house to your brother, right? Where you might know a little bit about the creaks and a little bit about the sink and a little bit about the chipping paint, but they actually love and have memories of and actually are great stewards of that house. As opposed to when you're going to a financial buyer and that financial buyer is looking solely at the bottom or the top line. So one of the things that we're constantly asked is, well, how do I get to a valuation? How do I value this business? And while there are multiple ways in which evaluation can occur, most of the time it's a pretty simple equation. So we're looking at earnings. We're looking at the sort of bottom line of that business and this magical thing called EBITDA, but we can get into that in a second. But basically it's earnings times some multiple, which actually gets you to the purchase price. And so earnings, let's break it down a little bit. Earnings is basically earnings before interest, taxation, depreciation, and amortization, which is basically a fancy word to say the net profit in the business before your taxes and all the rest of the write-offs. Plus, you have to factor in owner's draw. So you as a sole proprietor, most of the time, I know that I, as a startup founder, will definitely use the sort of like business as a piggy bank. And ultimately, those owner's draw need to be equated for in the valuation or in the earnings calculation of the business. But if you are one of, or the key person or one of two or three key people in the business, then the workers also have to figure in a replacement cost. How much it's going to cost to bring in expertise or bring in management to help you, or help them, I should say, run the business in your absence. Now, the multiple is really just the reasonable expectation for a business to remain stable. So I know that in the time of COVID, that is a onerous task to take on. But some common rules of thumb apply when you're looking at different businesses. So you have to take into account your previous earnings. You have to take into account the market you're operating in, its stability, and its ability for the business model to succeed. And really, this again comes down to a conversation between the workers and the owner. And again, the last piece about this, it produces a purchase price. So that purchase price is an agreed upon figure, an agreed upon number for both the workers and the owner to understand that's how much money we need to actually do the deal. Now, if you get to that magic number, what happens? Well, of course, you have to finance it. You have to be able to find the money to actually pay out the debt. Now, a lot of times when people are thinking about this, they're thinking about, well, if I'm a worker in a business, I'm trying to buy the business, does that mean I have to have, centuries of savings in my bank account in order to actually do the deal? Or does that mean that I have to go and do a, crowdsource or crowdfunding campaign in order to raise the money? As in most financing transactions, the purchase of an asset, the purchase of what you're buying is dependent on a lot of factors, and there's actually a lot of levers to pull. So we wanted to outline just a couple of these levers so that you can understand some of the things that you're going to need to toggle with, as opposed to thinking about it as a one lump sum payment. So first and foremost, when you're actually going out for the purchase price, you're going to want to see if there's assets in the business and if those assets might be able to be bought by debt. So for instance, Bread, as a lender, is able to come in and help finance the transaction by purchasing or collateralizing our debt against the assets of a business. Second, we could look at seller financing. All that really means is a seller, the person who's motivated to actually sell the company, is writing an IOU to the workers. And the workers are saying, we will guarantee a payment of X over the course of Y years. Or we guarantee that we will pay X amount out of profits or X amount out of revenue. So you can play around with what the actual terms of that seller financing might be. However, seller financing is just that. It's a debt instrument, a promissory note sent to the workers by the seller. And the last piece is member equity. So member equity acts a whole hell of a lot like traditional equity, like private equity. Basically, it is money that the workers come up with in order to position themselves within the company's equity stack. So what that could look like is actually borrowed money from Bread. We are able to finance member buy-in in order to have that equity stake in the company. Now, of course, we're probably not going to finance the entire purchase price with one of these three pieces. There's going to be some mix and some match of what is needed, and it depends on your business. So walking through this a little bit deeper, if you are a service-based business, meaning you do not have a lot of physical hard assets, you're going to not be able to collateralize, or you're not going to be able to get debt financing against those assets. However, that does not mean that you're negating the possibility of a purchase. It just simply means there might need to be a bit more seller financing in the transaction. As well as, let's say that the members of your business might not have any actual cash to put into their member equity. Just because that's the case does not mean that the deal is off. They could come to a lender like Bread or other lenders for them to actually finance their equity position in the business as well. So we wanted to go over these three pieces and really sort of dig into what creates the purchase price and how we could actually finance the sale of that business. Now remember, we are part of a larger network called Seed Commons, and Bread itself is a non-extractive lender. So what that means for us is we actually position ourselves right alongside the worker. We do not take from the business unless there's actual profit in the business. And unlike most lenders, the collateral requirements do not actually need a personal guarantee, meaning that you as an individual sole owner of the business might have gone out and gotten a loan from the SBA or from another lender and needed to put up your own personal collateral in order to do that. we work with worker cooperatives and other democratically run organizations in order to and understand the need to not have personal guarantees against the loans that we give, which is a bit of a different story. That said, there are many other lenders out there, including partners like the BDC and other CDFI, community development financial institutions in the city, that are willing to work with businesses that are considering a worker buyout or a worker owner conversion. So we wanted to stop there, and I can actually go ahead and move into the question and answer round. And really, at the end of the day, what I'd really like us to do, you can use the chat in order to actually ask the questions. And if you want, you can also go ahead and raise your hand, and we can ask the questions that way. So we will pause there. And I'm actually going to start with a question for Jim. So Jim, in your experience, what are sort of the relative size, the actual sizes of the businesses that you're interested or that have been interested in converting to worker co-ops?
Yeah, most of them do tend to be small. We see some medium-sized businesses now, but in the last, well, my own worker co-op was a conversion, and we were 7 people. And for IT firms like ours, that's common, but it's really common, usually less than 20 people. We do see some larger ones, but that doesn't necessarily make it a more complex deal. And so, but it's generally a good fit for relatively small businesses, less than 15, 20 people, more commonly what we'll see. And that, I think part of that is because the larger businesses may have more success, finding buyers, basically. But this really small businesses can have a more difficult time. So I think this is a good option for particularly small businesses, like less than 20 people.
Awesome. Are there any sort of funding caps, meaning top of the line, for you to contemplate a worker cooperative conversion? Meaning, is there a limit to the amount of, or the type or size of business as well? So we talked about the low end. What about the high end?
Yeah, no, there is no limit, really. I mean, any business in any industry can convert to worker ownership. Size is not so much of a limitation. If you have a high degree of turnover in your workers, then that's a consideration. But even that is something that we can find ways to work with. We also have some questions in the chat whenever you're ready for them.
Yep, for sure. So the question in the chat from Kathy, so given COVID, what does a timeline look like to complete converting to a worker co-op?
Yeah.
So maybe what we would like to talk about, Jim, is the actual ideal timeline, and then given COVID, what that actually could look like.
The traditionally, you might have seen from the conversion timeline chart, we had our numbers across the top representing the weeks. And so it's unusual for a conversion to happen in less than 6 months. It does happen, and we want to be sensitive to the time constraints of the selling owner. 6 months is common. Often if we are in contact with business owners well in advance, it's not unusual for it to take a year or two when the business owner has that amount of time. A lot has to do with the conditions of the business. Given COVID, we realize that time may be more of an issue, and we're one of a number of folks in the Seed Commons exploring accelerated paths. So I would say that a conversion timeline of 90 days is something we could certainly look at. And I think for most business sales, that's probably the minimum you could expect.
Awesome. So
feel free to follow up with us on that if there are any other questions. Go ahead, Joseph.
Yeah, I was actually just about to say, so one of the biggest concerns that I'm hearing is definitely time. And I think that a really critical thing to understand about a conversion is most of the time we traditionally would like to sort of front load the planning and design process for the actual worker cooperative conversion, meaning the engagement of the workers, designing new governance, understanding that. However, in the time of COVID, there is a pressing need to potentially convert the business sooner, and then basically invert that planning and design process post-transaction or post-actual completion. And that's where the possibility of like a 90-day time horizon could come into play. But again, that necessitates that the selling owner needs to remain aligned and in the business and as an advisor to the workers moving forward. So it probably is not ideal for a sale of a business that is just trying to basically sell and then, you know, sail off on their yacht into the sunset. But it probably is a great for a business that has the understanding going into the transaction that they're going to need to provide some advisory support to the workers moving forward.
And one caveat I would add to that is if you have a situation where the lead management of the business is not the owner, for example, you might have a business in which the owner is already a little bit absentee or has already stepped back from the operation a lot, then that's a situation in which, you know, conceivably the owner might not, you know, the business might not realize a significant benefit by the owner sticking around and consulting. So it a little bit depends on the management of the business and whether that is really the ownership of the business as well. We have
Awesome.
a couple
So
other.
the next question in the chat. So and this is from Ty, if a few sole proprietors want to merge into a cooperative, then what kind of financing should they look for? So Ty, to answer that question specifically, so there are definite needs for a startup versus the needs for a conversion. So we're interested in both, meaning Brett has definitely financed both worker cooperative startups and worker cooperative conversions. The question of bringing sole proprietors together, I think that that's more of a question of management and the ability for those sole proprietors, I'm assuming if they're in the same industry, to actually both share on contracts or share under the same sort of insurance plans and actually looking at a holding company structure in that regard as opposed to looking at a conversion in the more traditional sense. So there are definite routes for sole proprietors to join together in a cooperative fashion, and definitely reach out to us about that if you have a specific need in that area. So Joseph asked, how do you deal with turnover? So this is actually a really interesting problem or question in the worker cooperative community, specifically around conversions of businesses that actually do have a high turnover. So one of the big questions in that space is, what does buy-in look like for a high turnover business? So what we do generally is design around whatever the current business operations are. So if you're in a high turnover industry, we would not set the buy-in in a way that that would be inhibitive to the workers that are potentially turning in and turning out. However, we would need at least a few steady and consistent workers in that business in order to maintain the business continuity. Last piece is, we have actually found specifically, for example, in home care, that retention numbers for the business go way up because of the conversion to a worker cooperative, mainly due to the fact that those businesses are, again, in the high turnover industries, have traditionally lower wages and are not necessarily as worker-centric, for example, or the ability to self-govern as others. So there are actual benefits for a high turnover business to converting to a worker cooperative for retention specifically. Jim, do you have anything to add for that?
Thanks. That's a great summary. Yeah, one thing I would add to that was in the industries that typically see a lot of high turnover, but where we're trying to improve conditions for the workers, where the workers would rather have, instead of being transitional themselves in their lives, where the workers are in fact would like to have a long-term situation. We can see creative structuring, partnering with nonprofits to help basically improve the working conditions of the workers, give them greater pay, resulting in lower turnover and better training, better quality of service to customers. And so we've seen some worker co-ops that actually end up setting the standards in the industry by partnering with government and nonprofits strategically to basically raise the standard of work and of care within a particular industry. So there's some very interesting possibilities there, partnering with nonprofits and government as well.
Awesome. So we have another question from Kathy. So for businesses that are taking PPP money, so the Payroll Protection Program money, how do you have advice on how that would fit into a worker cooperative switch? So I actually have been on several calls recently with folks that are contemplating this issue. So a couple of key points here. the lenders behind the PPP money, so whether you're going to a larger bank or to a local sort of smaller bank, those lenders, the covenants of those contracts generally do sort of list out the beneficial owners or list out the current ownership structure. However, cooperatives are entitled to PPP money. So the ability for you to do a conversion and then access PPP money is definitely there. There are, again, covenants within some of the loan contracts that require you to alert or to notify the lender of any transition in ownership. And the lender will still be able to rate the PPP, again, against whatever the program, the policies that actually come out. However, I have not seen anything that would inhibit, per se, a conversion. However, you would need to notify the lender of the change in ownership. And again, with a worker cooperative, they are eligible, worker cooperatives are eligible for PPP money and are rated as do need to outline the beneficial ownership and all the rest of the terms that you would have in a traditional PPP loan. Jim, any additions there?
Yes, please. I would add to that worker co-ops are also eligible for the other SBA program, Economic Injury Disaster Loan Program. And from the paperwork and the forms you're filling out, it may not be clear that worker co-ops are actually eligible. But Joseph and I have colleagues who've been working at the national level with policymakers and the SBA and who have confirmed that, in fact, worker co-ops are eligible for both the PPP and the EIDL programs, even though that may not be apparent from the paperwork. It's really just a different ownership structure in a sense, but it's still business ownership. And so it qualifies for sure.
Awesome. So we have a couple more questions. So are there roles in a co-op for both investors and energetic investments, or is it important for all workers to make similar financial investments in order to maintain equity? So this is actually a really interesting question, and it sort of goes back again to our financing or how to fund a deal. So in a worker cooperative or in a cooperative in general, you are able to create multiple share classes. So you are definitely able to engage and have both worker cooperative members, both worker members, as well as capital providers or investor members. Now, the rights and responsibilities of that cooperative obviously are set forth in the bylaws and are dictated by the people that are engaged, so by the co-op members. And always in a worker co-op or in a co-op in general, the members need to have the most benefit, so actually financial economic benefit from that business, as well as, and again, we go back to the one member, one vote, as opposed to an ESOP, they have to have democratic process as a patron member. So specifically, if you're looking to do a conversion and there are potential investors or philanthropic support, you are able to take investments in order to do that conversion into your business. And we can definitely work with you to structure that transaction. However, it is important for you to understand that worker cooperatives do have in their bylaws the ability for the workers to have the majority voice and the majority economic benefit, meaning return or profit from the business itself. Jim, anything to add on that point?
No, it's a great summary. I have nothing to add to that.
Great. So we also have the question saying, if a business who has needed to close via COVID, and we can actually go into a bit about bankruptcy as well, but so if a business who has needed to close via COVID and didn't priorly qualify for a PPP transitioning to a co-op, would they potentially become eligible? So there are certain criteria in the PPP for previous or prior business. So they're rating you against last year's numbers. So if you close the business and have actually forfeited your LLC or your, you actually close the business legally, there might be a situation where that actually would render you ineligible for that PPP. I think the other side of that is if you have not actually closed the business and are contemplating conversion of an existing business, that might be a situation where you would qualify again. And depending on the ownership structure, you would have to list new beneficial owners and all of that, but you might still actually apply for that PPP and get it. as well as the EIDL, as well, the economic injury disaster loan. The same kind of question sort of goes, and Jim, maybe we can talk a teeny bit about this, and then we probably should wrap up, about businesses that are potentially contemplating bankruptcy as a potential mechanism to help them through this economic crisis. So bankruptcy is a commonly misconceived, or sort of a misnomer of types, where there are definite benefits and also very many risks about businesses going through the bankruptcy process. We have seen many worker cooperative conversions happen out of bankruptcy, meaning that the workers have actually put in a bid or actually been able to buy the assets, or for the benefit of creditors, have been able to acquire those assets and continue the operation of that business, and allowed the creditors to be paid back, but then also allowed the workers to still remain engaged in the business. So there are potential avenues through the bankruptcy process that you would actually want to engage in. However, we do want to be very careful not to sort of have any misdealings or have the appearance of any fraud happening with you instigating that process in order to convert the business for your own benefit. So there is definitely a need here for you to be careful and consult legal advice when going through any bankruptcy process. But we have seen in the history of worker cooperative conversions, we have seen a lot of businesses that go through the bankruptcy process coming out the other side owned by the workers. Jim, anything to add on that point?
It's a good point. I did consult with an attorney extensively last year when I was working with a worker co-op that was considering bankruptcy, and he had been seeing a number of bankruptcies in the co-op sector. And one thing he emphasized to me that I wanted to pass on was that depending on which chapter you file for, but most commonly, you lose a lot of control in the process when you file for bankruptcy. And it can be very, very expensive. And so it's an option to consider, but often it's a process that you can't have a lot of control over unless maybe you're a larger company with lots of lawyers on staff who know how to navigate it. So I hope that's helpful.
Awesome. So we want to end on time and sort of with some time to spare. So what we'd really love is we'll follow up with a survey asking you to basically help us understand what you need. So if you are a business that is currently contemplating a conversion, or you're connected to a business, either as a worker or as an advisor or as a friend, we are definitely actively engaged with Baltimore City, as well as Maryland as a whole, based businesses looking to have shepherd or stewardship through this process. We totally realize and understand that during the time of COVID, things are crazy and things are a bit topsy-turvy. What we hope to provide is, at the very least, an advisory role for you as the business owner, or for the workers who are engaging in this process, to realize that it is an option, that it is an avenue for you to explore as a potential way to weather the economic storm. So Jim, any closing remarks or last words?
No, just thanks. Please do respond to the survey when you get it. And we're available for any inquiries offline as well.
Awesome. Yep. Please feel free to reach out, info@baltimoreroundtable.org. Thanks again. Have a great.
Thank you.